folks. Welcome to the Daily Coin. My name is Rory, and today is Wednesday, March the 2nd, 2016, and I have the distinct honor and great pleasure of welcoming back to the show Mr. Steve St. Angelo, who is the proprietor of SRS Rocco Report. How you doing today, Steve?
Doing great, Rory. Again, everything seems to be moving in a faster speed. The earthquakes in the markets are becoming, the Richter scale is getting higher and higher. So the volatility is going to continue to increase, and I think this is going to be a very interesting year, especially for the precious metal owners.
I think so too, with the way that everything is kind of shaking out here in the first couple of months, with gold and silver both up for the year, year over year. I mean, it's a good start.
Yeah, and it was funny yesterday. I think the Zero Hedge title was the worst economic data in 4 years, and the Dow Jones goes up 340, almost 350 points. Now, the interesting thing was, normally when the markets really head up higher, gold and silver really sell off, and they did a little bit in the middle of the day, but they came back, and it wasn't down. So it was good to see that. So even on very big pumps in the markets, the metals didn't sell off that much. But when it's the opposite, we do see the metals actually moving up much higher when the Dow falls.
Yes, and gold and silver are both up today, so far anyway, but it's still early.
Yeah, it's still early.
They're like I said, they're both up. It's a green so far. It's a green day, and hopefully, silver's back staring $15 in the face, and gold's about 12.38 right now. So it's all good. And you just pinned yesterday article titled "The COMEX versus Private Gold and Silver Eagle Stocks," and you demonstrate how little inventory the COMEX has. And the COMEX, the reason that the COMEX is important is because it sets the global value for gold and silver. And when you have almost no stock, I mean, come on, that something is out of balance with that whole idea, in my opinion.
I agree, and that's the reason why I wrote the article. I wasn't saying, of course, the metal that is on the COMEX is supposed to be used for delivery into the market, and so that was the purpose of the exchanges. And then we have now the Shanghai Gold Exchange and the Shanghai Futures Exchange, and they act more as a physical delivery mechanism. And the problem is, since 1986, the United States U.S. Mint has produced almost 450 million ounces of silver eagles. And I would say the majority of those are still held in private hands. Could be mom and pop investors, or could be a larger wealthy or institutions. So most of that silver is a stock. It is held privately, and it can be resold back into the market as an investment for someone else if they want to purchase it. Now, compared to what is in the registered COMEX silver inventories, there's only almost 25 million. So it's 20 times less silver at the COMEX than what we have just in silver eagles. So it goes to show you there is a huge disconnect, and that 25 million ounces, Rory, has fallen since, let's say, I think March of last year, 2015. It was 70 million ounces. It's fallen now to below 25. So that's a pretty big fall in just less than a year for the registered inventories to fall that much. And the gold inventories at the COMEX registered have fallen even more. So we're seeing this drain of deliverable gold on the COMEX, and I think it's going to be very interesting this year how things could unfold.
Yeah, according to your analysis, Steve, there's only 278,000 ounces of gold on the COMEX. I mean, that's really not very much.
That's less than 10 tons.
I mean,
Now,
and the Shanghai Gold Exchange, I mean, they'll move more than that in less than a week.
yeah, exactly, less than a week. And Koos Jansen had made this. He wrote an article saying that some of the gold can be delivered through the eligible. And while that is true, it's more of a private. They call it ex-pit through, I guess, the over-the-counter. I don't see a lot of that happening. There is some going on, but I think the majority of the eligible gold, as well as the eligible silver, are held in very tight hands. I don't think much of that will be used for delivery into the market. That's the reason why we're seeing the registered fall in both gold and silver over the last several years. So even though we may see there could be some gold taken out through the eligible, it won't be that much. And so this year we could see some fireworks coming out of the COMEX, especially if we do see the markets really start to crash and more physical demand for the metals coming. I would think we could get a surge this year in physical gold and silver buying.
Yeah, I certainly see that. I mean, and according to the U.S. Mint numbers, it's already happening. I mean, because they've already sold over 10 million ounces, 10 million 10 million silver eagles, 10.7 just in the first 2 months. I mean, that's on pace to crack 50 million, 55 million for the year. And no, and once again, ration sales. I mean, it's
you're
so
right, and that's only one official coin.
correct.
That's only one official coin. And let me just, in another article I wrote, I put a chart of the COMEX registered silver inventories, and it's at an all-time low since going back to 2001. And what happened was in 2008, it was 90 million ounces, and then over 3 years, it fell. And right when silver peaked it was March, April of 2011. A little bit later, I think in August, that's when the registered silver inventories they fell to their lowest. So that was about 4.5 years ago. And that was like 26, 27 million ounces. Well, in 3 years, as the price of silver fell, Rory, the COMEX registered, they actually increased over those 3 years until about 2015. They went to 70 million. But what's really interesting, they have fallen from 70 down to below 25 in less than a year. It is 3 times faster, the rate, than the decline from 2008 to 2011. 3 times faster. So we're seeing silver falling or being taken off of the registered inventories 3 times the pace. I do believe there's a lot of silver being acquired by off the radar by big investors, wealthy investors.
I would tend to agree with that. And speaking of wealthy investors, want to kind of change gears just a little bit. And there's been, as you are well aware, Steve, there's been a lot of talk recently about cashless society. And Dave Kranzler, our buddy over at Investment Research Dynamics, he wrote an article a couple weeks ago saying that if you hold gold and silver, that it doesn't matter if it's a cashless society or not. And what do you think about that? I mean, how do you feel about cashless society and versus precious metals? If you hold precious metals, does it matter?
It does. And I know they're talking about getting rid of the 500 euro note in Europe, and then of course Larry Summers talked about getting rid of the $100. And you see the $100, and I believe Dave Kranzler mentioned this, that the $100, the currency, the outstanding currency in the United States as well as across the world, a lot of foreigners have dollars. Most of it, 80% of it, is $100 bills. So what they're trying to do, either in Europe or in the United States, is they're trying to get rid of where you can. It takes a lot of 50s and 20s to
Right.
remove to get that kind of volume. They're never going to do. I don't think they'll ever go cashless because there's too many poor people in the United States that don't even have a checking account. So they need to, and then there's the illegal migrant workers that get paid cash. So we'll never see a total cashless, but they're trying to go after the large denomination bills. But that doesn't matter to me. It really doesn't matter. I think in the long run, it just won't work. Just like the London gold pool didn't work, just like the central banks dumping gold into the market in the late 1990s, early 2000. They dumped a lot of gold, Western central banks. So all this doesn't work. It's just kind of these policies. They're trying to do these policies to stop or to stem the tide that's going against them. So I think if you do own physical gold and silver and they take the $100 bills out, it won't matter to the precious metal owner. It will matter to folks who do that, keep their digits, their wealth in banks. That's where I see the problem.
Well, if they keep it in the bank and it's just, blips on the screen, then they're not going to care one way or the other. I mean, whether it's the $100 bills in circulation or not, they're not. I mean, it comes to me. It comes back to these big banks who have been in front of a judge. They've been fined for drug money laundering. Okay. How are they going to be able to maintain that massive profit center for these zombie banks if there's no cash to do their drug money laundering? Period. So to me, they're attacking themselves when they do that. So I see that as being one of the outliers that would keep cash on the table, because that has to be a massive profit center for them. So, but that's
I
just
agree. I mean, what do they do? Are they going to give the drug dealers debit cards?
right.
It's silly. So I think the global drug trade is estimated to be 1.2 or 1.5 trillion, and I would imagine who can afford those drugs. It's a lot of Americans, unfortunately, and so that's a lot of the $100 bills go in and out of the United States. So I don't see them getting rid of that. Maybe they may say they're going to do it, a threat, but I don't think it's going to happen. And even if it does, if you own the precious metals, I do believe you will have the security compared to folks who have to keep most of their wealth in the banks.
But you've been talking. You wrote a great article a couple weeks ago, Steve, about the silver mine production for 2015, and how do you see 2016 playing out in light of your analysis, and even into 2017, because I know we're early into 2016, but some of these guys are already making reports and projections for 2016, and I was curious if you had looked at those numbers yet.
Yeah, and let me say this. I do believe that the silver production is either flat or declining in 2015, and it's just going to get worse going forward. And I actually emailed Thomson Reuters GFMS, and I have been doing that for the last 6 months. And I asked them this question. I said, "Are you all using the Mexican INEGI figures to get for your figures for the world's? They do the World Silver Survey as well as the World Gold Survey." And they responded, and they says, "Yes, we will be using 2013 Mexican INEGI figures." But they basically said they will not be using 2014 or 2015.
Wow.
Because according to Mexico's figures, they've been declining for the last 2 years. Now, it doesn't really make sense because some primary miners like Fresnillo and other companies are showing increases. But according to the data from Mexico, they showed a high peak in 2013 and then a small decline in 2014 and again in 2015. Well, GFMS, for whatever reason, they're not using 2014 or 15 figures, and they have been. I've been looking at them. They use a lot. They use mostly government data because I've been looking at it. But for whatever reason, either they don't trust the data Mexico has. I don't know why. They trust 2013. So I see production falling slightly in 2015 from the numbers I'm looking at. Now, you asked me about 2016.
Yes.
I think we'll see 5%. I think that's baked in the cake. Now, where the production will fall won't be from primary silver mining. Very little. Very little will come from primary silver mining. We actually may see a little bit of an increase, especially if the price of silver starts to move up. Where the decreases will come from will be the base metal mining industry, copper, lead, and zinc. And I think the base metal mining industry is in severe trouble, just like the U.S. oil industry as global oil industry. I mean, Exxon just announced today, Rory, they're going to cut their CapEx expenditures 25% in 2016. And this is above and beyond what they were going to cut already. So what's going to happen? We will start to see more declines in the base metal prices. I think we're going to start seeing even copper fall and zinc and lead. So base metal mines will start shutting down. The most unprofitable ones first. That's where the majority of silver production comes from. It's gold, lead, zinc, and copper. So I do think going forward, we could see 5% this year or more decline, even if primary miners have been slating to bring on more production, like Fresnillo wants to bring on more production. They've got several mines in the works, and they'll start coming online in 2016 and 17 and 18. That still will not offset the declines coming from the base metal mining industry. And I actually think if we have some serious black swans where things really get out of control, I do believe global silver production may have already peaked. Because energy will continue to fall, and if GDP is falling, energy production is falling, then base metal demand is going to fall. The prices will continue to fall. However, I see gold and silver actually going up compared to most other metals in this, let's say, this deflationary environment. And so that's how I see it. I think, Roy, we can see 5% lower at least this year for silver production. And then if things get really bad in 2017, it could start falling drastically. And my thing is, I think we're going to see a Seneca-like cliff, a shark fin-like cliff decline in global oil production, global GDP, and global metal production. I think that's the way it's going to happen. It may not happen in the next year or two, but as time goes on, it won't decline slowly. And I don't think we're ever going to come back out of this. So we're going to see a cliff-like decline in production across the world of many items, and that will kill the value of most paper assets, which is why I believe in the precious metals.
And I as well. I have little faith in paper assets. I mean, Eric Dubin likes to, and he makes a very good argument to owning, mining stocks and various other stock and equity instruments. But see what you think about what's going on over at the Mint with the sales. And I don't think we covered that. I mean, how do you see that? How do you see that playing out this year? As far as are we going to see some a new all-time high in Eagle sales, even under rationed sales condition for both the Eagles and the Silver Maple Leafs, or is the Kangaroo going to come in and take some of that volume away from them?
Well, I think the Kangaroo and the Perth Mint set up the Kangaroo. It's their first coin that is similar to the Canadian Mint's Maple Leaf as well as the Silver Eagle. before they sold a lot of coins that had different denominations, 1 kilogram, and 2 ounce, 5 ounce, 10 ounce. But now this kangaroo is their 1 ounce coin, just like the Silver Eagle. They will continue selling more, which is a good thing.
Yes.
But I do believe the situation here is going to get worse. And the only thing the government can do now, they can't do QE4 or whatever QE it is, and they can't do QE4 for the wealthy. They have to do QE now for the folks, which would be a check in the mail. That's the only way that could generate. They can kind of postpone this, but if they do that, that sends the flags off to all the wealthy investors. That means it's inflationary. So we will see huge demand for that, for the precious metals. But if they don't do that and things just get worse in the stock markets, I see a continued increase of Silver Eagle buying. Because, I mean, if you look at a chart since 1986, basically the annual sales of Silver Eagles, Rory, were between like 5 million and 10 million. And that was up till 2007. A nice little, basically, line right there. Well, in 2008, they just started to explode. And we had 47 million last year. I think if they continue with producing 4 or 5 million ounces a month, let's say 4 million ounces a month, we will hit a new record. And then we have all the private mints that are now selling private coins. And we must remember the GFMS they do not provide private rounds and private bar data in their official coin and bar estimate. And they emailed me and said that they're trying to work on that figure. It's kind of hard to get that number, but they believe it was 30, 40 million ounces at least last year.
Had to be.
So, yeah, there's a lot of silver that's being absorbed by investors. And what is different, let me just say this, what is different since 2008 compared to, let's say, the buying that the public did when silver shot up in 1979 and 1980. And then it fell, but then there was more buying again in 82 and 83 by the public. What was different? It was a few year spikes. And then it dropped off for 80 and 81. And then it picked up again because they thought inflation was going to start hitting. So they picked up buying for a couple more years, but then it fell off. So we had a couple of years and a couple of years. We've had now 8 years of record buying.
Yes.
Record buying. And so what's happened is nothing's changed, as you know. They haven't fixed anything. They just papered it over. And I think investors, wealthy and small investors, understand that. And so I think we're going to see another record this year for Silver Eagle buying.
Yeah, the only year since 2008 was 2012 when there was not a new sales volume record.
Correct.
And then in 2013, it made up for 2012 because it shot much higher than 2011 as far as the sales volume. And it's just been steady. It's just up ever since. And I think that, I mean, right now, if you just annualize what's happening, we're looking at 55 to 60 million ounces, 55 to 60 million Silver Eagles, just Eagles, not Buffaloes, not anything else that the mint sells, just Eagles. And I don't think that, I mean, are they going to be able to produce that?
I think we will see 50 million. How much more than that? I don't know. But we may see 50, 52, because I don't think, and I speak to some of these dealers. Last year, when we had that huge spike in silver buying, and that happened from, I think, June to September, beginning of October, there was a lot of buying, and there were shortages. You had to wait 2 months for certain products. I heard that the majority of buying was by the wealthy. And their biggest concern, from what I heard, was that they are worried about the bail-ins by the banks or
Yes,
negative interest rates. So the more talk of negative interest rates, cashless society, this is actually not good for the Federal Reserve and the U.S. government because it's just making these investors buy more silver and gold.
exactly.
So even though and I think we may go to zero or negative interest rates, and I think once that happens, I think then you'll start seeing a lot more buying.
I think that it will probably get out of control. And uh, when I was speaking with Eric Sprott and Dave Kranzler and several people that I've spoken with, Louis Camersano, if we have just a very small increase from the U.S. investor, which right now there's, from our best uh, guesstimates, it's just under 1% of the total volume is in gold and silver. If that goes to just over 1% of total volume, there's a problem. There's a huge problem because if you think about, we'll use 0.9%, and if it goes to 1.1%, a slight, 20 basis points, 0.20% increase, where's that going to come from? How are they going to be able to, how is the mint, the U.S. mint, the the Royal Canadian Mint, the Perth Mint, how are they going to be able to keep up with that? They will not be able to, period.
I agree, and I actually wrote an article. Maybe it was last year, and I do believe it's probably more like 0.5%. It's a 0.5% of investors buying silver. And so if it doubled to 1%, or let's say it just doubled from zero point 0.9, what you're talking about, to 1.8%, regardless, if if there was about 230 or 240 million ounces of bar and coin last year, if it doubled, it would go to nearly 500 million ounces.
Where's that going to
I don't.
come from?
That's the issue. You see, and then if it quadrupled, we're talking a billion ounces.
That ain't
And
going to
buying
happen.
a
I mean, that's not possible, and that's my point. Is that my whole thing is that if you're saying that there's a 0.5% of the investors hold silver, you don't have to double that number. You don't have to quadruple that number. You take half of that, and it goes to 0.75. Now we have a serious issue. If you double that number, it's game over. I mean, there's not going to be, everything would evaporate. They cannot. My point is that they can't keep up with the menial demand that's happening right now. They can't.
I
Otherwise, they wouldn't be on ration sales.
I agree, and guess what? Something happened at the end of last year, and I just found out about this. I couldn't figure out what was going on, but now it made sense. China has put another chink in the armor, and I didn't know this, but China had a ban on imports of silver concentrate and refined concentrates of silver. They had a ban, and matter of fact, it was a ban on many commodities. And the reason why was this was, let's say, it was a higher polluting, higher energy consuming kind of activity. So they put a ban on these things. Now, China did import, let's say, doré bars. Now,
Yes.
doré bars, they're made by the mines, and they're pretty much silver. There's a little bit of impurities in there, but most of the impurities are gone. But China was actually not importing any of these concentrates. They actually abolished the ban on November 10th last year
Oh wow.
on silver. Now, here's what's interesting. The Shanghai Futures Exchange reached a low of silver inventories of only 233 tons August last year. Well, when we had this draw on the global, let's say, of silver, people buying silver, shortages, a lot of shortages happening, uh, it stayed low, but it started to increase when the shortages started to disappear. And by November 9th, there was 491 metric tons of silver at the Shanghai Futures Exchange. It increased somewhat. Well, when China lifted their ban on silver concentrates from November 10th to today, their stocks now are 1,223 tons. They added 51 tons just yesterday.
Oh my goodness.
So now China is starting to import. And it's funny, they changed this in November 10th. They've been importing a lot of silver in this concentrate form. And so in just, let's say, 4 or 5 months, they have more than tripled their stocks at the Shanghai Futures Exchange. So now China is starting to get the concentrate, and either they see some writing on the wall, maybe for their solar, they're going to use this for their manufacturing for their solar plants, or they realize that silver will be in short supply. So I think changing that ban seems quite strategic to happen at the end of last year.
Yeah, I think it's probably a combination of the two, of them
Yes.
seeing the writing on the wall as well as the demand for solar, because as I've spoken about recently, Morocco has just back on February the 20th just announced that they were going to bring online 1.1 million homes of solar. So that's significant. That's in light of what's happening throughout the rest of Africa and in the various other countries with solar programs, and on top of the massive solar programs that are already well underway in China and India. And this is to say nothing of the increase of, just everyday people uh, switching over to solar. But when you make an announcement that 1.1 million homes will be added to the solar power line, that's requires a lot of silver.
Yeah, it does. And then when you start seeing investment demand picking up, it's going to be a perfect storm. And so, going forward, see, I originally thought solar demand would fall. It peaked, I think, in 2011 or 12. It peaked, but then it's picked up now, and it's actually this year. GFMS says it's going to hit a new record. This is my difference on solar. I'm for solar on individual, let's say local basis, but huge projects, and they're going to do them. Rory, don't get me wrong. These countries in Africa and India and China, they will continue to ramp up solar, but they're going to find out in the long run these huge projects don't pay for themselves. But that doesn't change the dynamics. It will cause more demand, which will put a squeeze on total silver supply. China is doing it for pollution purposes, and India is doing it for farming purposes to run their pumps. It's not as much for their homes, but for these towns that are these widespread country farms that don't have electricity. They could use a small solar array to power their water pumps for their irrigation.
That makes sense. Yeah, that makes perfect sense. So, I mean, it comes back to got physical. I mean, that's just the bottom line. That's I've been writing a lot recently and talking to a lot of people recently about silver and gold, and I'm going to continue on this path because it seems like we are reaching a breaking point, or as Eric Dubin called it, an inflection point in gold and silver. It just seems like something is about to break to the upside in a big, big way.
Yeah, I know. I agree, and I've been writing this, and of course the naysayers, say, "Well, you've been saying that for 4 years." Well, I mean, who knew that the Federal Reserve would take the QE and it would go into stocks and bonds? It went into gold and silver up till 2011 and 12, and then it went into stocks and bonds for the last 4 years. But that's not going to continue.
Not going to
They
continue.
can't keep propping it up. But
Nope.
I did want to, if you don't mind, I would like to throw one energy topic in.
Okay.
Could we do that? Every once in a while, I get these new people referring my work, a new website. And yesterday I was quite surprised. I had a Russian website refer my work, and it was for my article titled "Another Nail in the U.S. Empire Coffin: Collapse of Shale Gas Production Has Begun." And actually, it was two sites, but they were kind of connected. And it was from the Russian economist Mikhail Kazan. And he is this well-known Russian economist that has been talking about the coming collapse of the United States economy and empire. And so I guess he saw this article and he linked it on his site. And let me tell you, this is a pretty well-read site in Russia. I almost had over 2,000 views that he linked on this site. Now, what is interesting, the United States has been powerful because of the U.S. dollar. And when the United States peaked in oil production in 1970, we went on the petrodollar standard. And so the petrodollar standard kept us going even though production declined. The world was buying using dollars and we were getting oil. So it kept our economy going for the next 40 years. Well, then we brought on this shale oil and gas production. And we were supposed to be energy independent, that's what a lot of energy analysts and certain organizations were saying. But we're never going to become energy independent. And so shale gas production actually peaked in the top 4 fields in June of last year. It's already peaked, as well as the top shale oil fields have already peaked. And I think what's going to happen now, going forward, especially this year, even though production hasn't fallen, because the rig count has fallen 80% since.
Oh my goodness!
80%. I think it was 1,900 oil and gas rigs working in 2014. Now it's below 500.
Wow!
So it's almost 80% decline. Well, you would think, oil production and gas production should have declined. Well, there was a lot of drilled but not yet completed wells. There's a huge inventory of them. And that's going to get caught up, and I think we're going to start seeing a huge decline in U.S. oil and gas production starting in the next several months, probably by the second half of the year. And I don't think prices of oil are going to go up much from here. I think they're going to start going back down. And Art Berman, who is one of the energy analysts I follow, he says we're going to see $16 oil.
Yeah, I read somewhere it's 19, so 16. That's probably right.
Yeah. So, and this is a pretty good oil analyst. And so, what that's going to do, it's going to totally gut the U.S. energy industry. And as oil production falls, no longer will the world continue to take dollars. Maybe this year, maybe partly next year, but in the future, the world won't take worthless dollars or soon to be worthless dollars for oil. And so when you see declining oil production, we're not going to be able to import as much oil as we used to. And so I think things are going to get very rough in the United States. And again, the best place to be, and this is, keep it simple, stupid, is in the precious metals.
I like the KISS system. Well, Steve, I think we have given everybody a lot to chew on there, and I certainly appreciate all your time. And we've been speaking with Mr. Steve St. Angelo, who is the publisher of the SRS Rocco Report, and you can find all of his work, including his Silver Report. That's a subscriber base at srsroccoreport.com. Steve, is there anything you'd like to leave the audience with?
No, we had a great conversation, and I look forward to talking to you again in a couple of months to see how things unfold.
Yes, sir. We'll make sure and do it.
Thank you.
Thank you very much.